All right. So we are going to start with the important topic which we had last week, and we repeated like this is the third session. I'm repeating the same topic, but I'm going to add new thing about how to look for the probability and trend power. Now, for looking at BOS and validate the break of a structure, what we said and how to use it, how to trade the session high and low. Okay. How to validate the entry confirmation and how to validate the higher time frame S&P breaker broke OB liquidity. And how to act during the news, which has clean results versus mixed data. Money management, consistent rules, adding new strategies to your current strategy. Journaling trades, new topics is about probability and trend power. Okay. So these topics are very important for your daily trade and chart analysis. First thing I want to just, it is minor thing, but very important. Most of you guys, you do zoom in on the different time frames. So for you guys to be similar to other trader, at least to reset chart view and keep around 50, 60 candles minimum on your chart. So you know the freshest level currently what you have. It is very important to move with the price action. If you go on 4 hours, you will have a better data for higher time frame analysis. Now, what we did before, it was identifying the important levels. As you see here, this was important too, reacted earlier, and now we have this level. All right, so not valid anymore. We crossed this level once, we'll cancel it. Do not look for it again. All right, so now we are in the range of 1,000. Okay, so what you can do, next range is up. So these are higher time frame liquidity levels like swing high, swing low. You need to consider. And when you're trading on those level, you need entry confirmation. Then you can decide for the position you are taking. So entry confirmations are rule based. Now levels are rule based. What is in the how to validate the higher time frame S&D? Like this is the S&D which is valid one. We have fair value gap. We have break of a structure. Where is previous structure? Here, the swing high. So that is break of a structure. This is minor structures here. Already has, it's already broken. And then the current structure which made higher high also has been broken. So the push which is from here, the price, you should understand, this price did retrace around nearly half of the move. Okay, half of the move retrace, and then because of the strong bullish in the trend, it's continued to upside. This is how you identify the power of the trend. And this is one. Second thing, to put a valid rule for power of the trend, you need to know on each BOS, like if this is our market structure, let's say like this, and then, so this is invalid BOS. Where is it? Here. And the upper one is valid BOS. This is fake out. This is valid. So do not consider this as a BOS. Consider it as a sell side liquidity. Differentiate between a valid BOS from liquidity. Okay. When you differentiate, then you know that the extension, the the market structure is to upside, not to downside. Ignoring this and taking that into consideration. Also, you should know that, okay, this is your structure, right? This is your real money of the market, which they put, and this is the fake out. So if you have, let's say, 20 pips range or 100 pips range, break of a structure should be at least equal to that or more. That is a strong break of a structure. And then we can wait for a retest and take entry to continue to upper levels. Okay. So fake POS, valid POS. This is the market structure which shows the power to upside. This one shows the sell has less power, liquidate them, fake out. It's what you see with your eyes. Now, most of our entries, if you have noticed, when these FUs created, like sell side liquidity is taken and there is no power for sell, and we have a bullish trend, then the market behavior is to retest those level, go once for the range, retest again, take this liquidity, and go higher. Optimum entry is to enter on previous levels POS. So you need to find when if you created, where is the freshest level? If you cannot identify properly on the left, then look for the right side. Let's say you have a like range like this, okay, then like this, and then you got FU. Your structure is here, here, here. Now you have a confusion, no problem. Market behavior is to come back to this area, okay? Keep a range, breakout, and then you enter here on these breakouts and write them off to upside. So if the left side ranges are dirty, then look for the right side higher high to get created on M1 and then enter. So you need FU to show that sell side liquidity is taken. Sellers are not in power. They are not interested to sell this level and they are interested to buy. Most of the buyers are there to control the session or the point of interest. Then you need to go for the entry. Either previous structure will be clear, you can retest and then move. If not clear, then right side you need to create a structure, top of that another structure. And now these structures are valid once if the range, which is here, are at least 50+% of that. Like this 20 pips, here is 15 pips, 10 pips plus, 12 pips plus. It's retested, closed near to this area, and then retest to the previous structure to take a bullish move. So now validating POS on higher time frame or SND, you need to know that fair value gap break of a structure is there. Okay. And how to trade the session high and low. Session high and lows, you have indicator, okay? As I mentioned earlier, these indicators on lower time frame will show you the box. Now, each box will be this way, like this is Asian session range, okay? Now, what you need to see on the London open or London close, whatever, in the London session, you need to look for the liquidity above this. If it's going to be to downside, you're going to find FU to downside and then break of a structure, retest, take sell. If you find another one, retest, sell. Okay. So what I mean you need to get a candle pattern which shows rejecting this point of interest to buys. There is no buyers in the market or they are not interested as much as the sellers are interested to sell this level. So then when you get the confirmation for that this is your fight area, top and high of the high and low of the session. So on the high fight area, patterns will be easily understood. Like you can find it easily visible. The fight is visible. Like there is a rejection, there is a fake out, there is a few. So then you know that okay, this is important. Like how to spot. So the market behavior is visible when many people are fighting with that point of interest, you're going to see if you fake out, manipulation, so everything will be visible. When it's high hotspot and like important level for the price action to be considered, then you're going to look for your entry confirmation and then validate your entry and then take the move. Okay, let's say this is high of the session. Now sells, it's visible. It should be like this. Okay. So for buys, what you're going to see, you're going to see structures, a few rejection for the sell, and then you get buys. Here is the time where you get FU to upside. And now how to validate this FU is valid or no? As I said, this range, which is from here to here, if it's 20, 15 pips, the POS should be 10, 15 pips at least. So then you are validating that FU is right. So how to take it? From here, this is one place, till this range is TP1. If it continues up, that is your commission, okay? So you have to have a rule, enter here, the stop loss down, TP1, TP2, and then continuation to upside if that was the real move. When you're securing TP1 and the move is not continuing to upside, and then again you get fake out to downside, what will happen? You will have another FQ to down. If this structure is very close by, no problem. Wait for testing that structure or creating new structure, and then ride this move to downside. You need to understand where the 15, 30 minutes candle is directing on those points of interest, and then on 5 and 1, you enter for the structure-based entries. There you can refine your entry to lead the minimum risk to reward with higher reward ratio. Okay, so this is important points which I try to summarize it for you guys, how to look into them. Okay, these rules, I think it's for most is clear. If you have a problem, you will ask me in details. Where is your issue? Money management consistency rules. As I said earlier, what is important? You need to start slow. What is a slow? Here I'm going to show you. Now you have a account. You always need to have a stages of money management. When you are building your account, you're starting with less minimal risk, okay? 0.25%. Build it up to 2%. And then when you are on the 2% plus, if you're willing to increase your risk, you increase your risk to 0.5. Build the account to 4%, build the account to 8%, and then increase your risk to 1%. Believe me, if you're going to increase in that way and you're going to have a losing trade, you're not going to lose your control and emotion. What you're going to do, simple as it is, if you lose 1% from 8%, you're going to take another risk to come back to 8% and then go to 9, 10. If you lose from 10, 1%, no problem. Another risk is again 1%. So play with this to build your account with risk management. Risk management is made to fight with your emotional decision in proper plan, not being angry. When you lose in the beginning of the stages, 1%, 2%, what's going to be happening to you? Immediately you're going to start fighting against your daily rules, trading plan, and all decision will be emotional based. But do not let your money management lead into worse result. Keep it clean and follow this. If you have better plan, implement it and make sure you are improving. Okay. Then money management will come. Consistency rules about lot size. Let's say if you have account, you're losing lot 5, then that is your average lot. Let's say started from here. These are lot 5, okay? Then do not jump to 0.5 or 20. That is not making sense for money management. You need to have a range which has a minimum of 1.25 and maximum 10. So these are consistency rules. How you can keep yourself safe in that in the account by holding your positions with these limitation and the risk management. Like if in case you are not happy with the setup, go low. But how much low you can go? 1.25. How much big you can go? 10. Never ever get emotional and screw your money management in any kind of cases. Okay. Now, journaling trait is Excel sheet. You need to follow that one. Uh, adding, okay. Let's say you got new strategy, new group, they have new community, there is new strategy there. You want to take it. Do not take that strategy on your account. Build a journal sheet, add a paper trait where you will find during 6 months to 1 year to 2 years that these traits and this strategy is working and win rate is this much, RR is this. So you have data. When you have data and you know what you're doing, then take that into your live account or real account. Do not take any new strategies and say, okay, these guys are doing, let me try it. Because when you're going to again lose a trade with the new strategy, you're going to go into emotional phase. When you're going into emotional phase, it's equal to blowing the account. Okay? So keep clean. Chart, if it's not moving this month, it will move next month. You need to take this opportunity and build your account. So these are the main things which I want to talk. Now, my main topic is about the topic which is about probability and trend power. You know that trading involved not uh, like not everyone is doing the same strategy. Not everyone is following the same patterns. So it is total random decisions because of huge number of traders who are in the market. We have a bank trader, algo trader, retail trader, and a lot of other things. Okay, news is there. So do not be uh, into rule which is not making sense for a random decision, random probability based. All the rules you have to create, it's probability. So you cannot say, I am 100% correct. You can say the most probability is going to be like this. That's it. So when you're talking about random theories in the market, what you need to follow, you need to follow the hot point of interest, the place where people are fighting for it. Where there is fight, swing highs, like here. There is no fight happen, but this is the place where we are expecting that fight to get in place. Here, this is fight area. Breakout, retest, continuation. Okay. Many places you need to consider for hotspot of trading. Here, breakout. Okay, when you analyze this data, what you see? Breakout, 50% range, retest, continuation, 50%. Okay, so you see that most of the traders are willing to take in a bullish run 50% of the range. So that is new data you have. Okay, how you can utilize that information? So what you do, this is your range, and this is your 0.5. All right. Now half of the range is here, retest continuation. Next, this is your bullish run. Half of the range, retest continuation. Okay, so you need to understand how to follow the structure. Bullish run, half of the range, retest, continuation. So you have a bullish run, half of the range, retest, continuation. Now you should know that you have extensions to upside. Extension to up means the trend is saying I am bullish. Half of the range, It could be here. You wait for FU, liquidity, and then entry to continue. How you know that market structure is bullish or bearish? All right. Let's go to something like Bitcoin. Okay. On daily chart. Because it's trending, that's why I can easily talk about it. All right. So here, the move is this much, okay? And break of structure is from here. So then what you need to do, you need to say, okay, this is the trend power after breakout. You see? Filter those noise. This is BOS. And this is your trend power. BOS, your trend power. All right? So it is bearish to downside. Now you have BOS. This is your trend power. It's a little bit higher. Okay. So as soon as you see the market structure on daily shifted, the bullish trend also came in, taken place. What is your trend power? From the break of a structure up to here is your trend power. Now, when you see one small, one big one, next is going to be for the probability on breakout, a bigger one, or equal to this. All right. So try to analyze the trend and market structure and its power with after BOS move. It's very important to consider those. Then you go for lower time frame and decide which bias is stronger than other. Okay, you have sell and buy. So higher time frame is telling you sell. You see the bearish is very low volume, bullish is high volume. Immediately you go for bullish. Okay, and this is one. Second thing, never go for lower time frame. At least consider 50% retest. If it's here, this is higher time frame. But on lower time frame, always look for retracement. Okay? Like here, there was retracement. This shift. Retest and continue. Now, what we have, what type of trend we have? You have another type, okay, which is retracing more than a half. From 25% of the, it's or 75% we can say of this range, it continued to up. So you have bullish run. It can retrace here first, test the high, retrace here and test the high. And also the worst case scenario, it's 25% of the previous range and then go up. So if you look at gold chart, always you will see these levels are active. How? Let's go. I want to check a scenario which we have. I think this one we have. Let me see. Yes, we have. Okay. Now, first, pick out from here. Pick out from here. This level. If you to up, EOS on the left, retest. That is around 20 pips, I think. It give you 16 pips. Okay. That is first buy to be taken. Another one, closing below that level, retest, sell. See the price action is clear. And this is the level You don't know what is happening on the left. Only you see the current chart. All right. After that, what you have, retesting to high, liquidation of this like this level here, and then going to up. Retesting the resistance. If you're to downside, clean drop to 50%. There is nothing, no breaker block, nothing on the left, maybe only this one. Very far. Okay. Retest, move to up. Again, another trend belt. Retest to half, which is POS on the left. But when you see lower time frame giving you a few to up with the news, a trend. Now this is the trend continuation. Okay. So based on these rules, you know that market behavior is like this, like a lot of retail trader, institution trader, but the wave it's happening. Okay, first 75% reaction you need to control, check, but most of the time they are willing to buy from this level and retest high. If the breakout happen, it will continue. Now, you want to validate again. This is your full trend, half of the range. Let me remove this. Continued. Then this came here into where 75. Sorry, 25. Where this one. Okay. Here you get pattern to up, you enter. On the lower time frame, there is confirmation. Another place. You need to find a strong momentum and candles, green candles or red candle. Half of the range is here. A few on this. A few continuation to TP resistance. Okay. And then it came down. Again, it is half. This is not 25. Same continuation. Now, if you go to my analysis, gold, so now we know point of interest. You can match that one with your breaker block, with your POS on the left. Okay, let me show you something which I did earlier on before the session started even. Okay, now the analysis, leveling before everyone start. Okay, this one is here. All right. So how I draw this line? On the left, there is a structure I know, swing high. But from here to here, this is 50%, this is 75%. 75% reaction happen. Liquidation of that reaction also happen. Next is 50% of the range. And what happened to 50% of the range? Go down. Still, you see liquidation. And beautiful move to up. Now, you see the drop. So still see, it's continued to up to retest the high. After that, look at this 50% of the range. Immediately, you get V22 upside and then right the move. Okay. So you need to know that you're in the bullish extensions. Then you need to wait for those levels to be retested. Use this concept when you have a strong trend, not on any level. All right. So I think now it's clear for you guys how I analyze the chart, and I'm going to stop the session here, and then you can start asking questions.